Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 29th of October, one day away from the Chancellor's suicide note, at least on the economic front. And looking at the FTSE 100 to start off with, we bounced off the floor of that channel there, uptrend line from February at 82.30 and found resistance at 83.50 in the recent past. Want to see an end of day close outside those parameters over the next few days, obviously in the wake of the budget. Got a possibility of testing 81.60, which is a September-October support area, or even at the worst case going down to 79.90, the floor of that red May falling trend channel. Probably the best guess is that we trade somewhere down towards or just between 80.50 and 81.50, just to stop out the longs and maybe bear trap the shorts. But at the moment, obviously, it is guesswork. Real clearance would be through 8400 and take us up to the top of the channel there from basically this time last year at 8700, but that would only really come into play if the market's already discounted whatever is going to come through on the budget. Moving on to the DAX, and here had a go at breaking that near-term resistance line. In fact, we've actually done it, which is very nice, at 19,600. Still looking for a follow through there. If we get the follow through by the end of the day, then hopefully we can get up to the top of that rising trend channel from this time last year, as high as 20,400 by the end of next month. The configuration here looking very strong in the sense we've had multiple bounces for the RSI above neutral 50. On the downside, worst case at the moment, the 50-day line, 19,000, and that's also October support. Moving on to the Dow, and here it's been a bit weak of late, but consolidated above the rising 50-day line there, 41,800. Above that, still looking for the market to get up to the top of the rising trend channel there from this time last year, as high as 43,500 by the end of next month. Obviously, we've got the result of the presidential election in the way, well, in between there, between now and the end of next month. So a little bit wide open there, but at least in terms of the charting situation above the 50-day line, 43,500 looks possible. Moving on to Bitcoin, which has got people excited overnight in the sense that we've managed to finally get through that resistance line there from back in March at 68,000 and also break through to the 70,000s. We've been looking for 75,000 and that June resistance line projection by the end of next month. And if we're really well behaved and really lucky, we might even get that by the end of this month. It always looked as though we'd get a breakout imminently on the basis of the double RSI bounce above neutral 50, which did work wonders for the overnight move. Worst case on the downside, obviously, recent bear trap support around 65,000 on this market. Moving on to gold, which has been behaving itself very well of late, but still waiting for the next push, consolidating around either side of 2750. Looking for 2800 or 2825 now by the end of next month, and a break of recent resistance, 2770. Hopefully we'll give that, and might be before the end of next month. On the downside, hoping we won't get anything lower than now than 2697, the floor of that rising June trend channel. Moving on to crude oil, where it looks as though things are looking a little bit weak. We've had a gap down here. Still have the fear that we can head down to the floor of that falling trend channel from this time last year as low as $64 now. And that's valid while there's no end of day close back above the latest gap there, just around the $70 level. On to the stocks, but by way of the FTSE AIM All Share, just to check where we are. Big neckline support there was around 730, which has been in place basically since the turn of the year. Below 730, we've got the risk of the next level down being around 710. The worst case would be that we have to head down to the old support there from this time last year, basically at 670. But depends whether you think the market's already factored in IHT disasters and other things, on CGT obviously for the AIM market, but that market looks as though certainly in the crosshairs at the moment. Moving on to the stocks, and we've got Carrero, which had an update today. Rising trend channel there from back in March. We bounced off the floor of the channel and the 50-day moving average exactly yesterday, and maybe somebody guessed it'd be a positive update today. Top of the channel there up to 31 pence, which we're looking for by the end of next month, while we hold above not only the 50-day line, but old July resistance at 20 pence. Next up is Cornish Metals, which seems to have enjoyed recent interviews by a new entrant in the interview area. We've got rising trend channel base there. Our initial target here was around 9 pence, above 9 pence, looking for 13 pence by the end of next month, and enjoying the break not only of August resistance there at 8.3 pence, but also a decent clearance of the 50-day moving, the 200-day moving average, currently around the 7.9 pence area. You can see that over the last month or so, we've only had one day with a red candle. So in fact, over the last couple of months, only 2 days basically with a red candle. So very, very strong price action here suggests that something very good is about to happen on the fundamental basis. Moving on to stock where something very good has already happened on a fundamental basis, which is Energy Pathways. Small bear trap from below yesterday's 8.1 pence low. Above that, looking for at least a retest of yesterday's high through 10 pence. Best case scenario still up to 13 pence by the end of next month. Apparently there's a big event happening this time next week, so let's see if the shares can squeeze higher up to 13 pence. In the run-up to November the 5th. On the downside, hoping that if there is any rug pull, it won't be lower than 6.5 pence, one of our previous targets there on that situation. On to ECR Minerals, where for a change, I'm surprised by the bullishness here on the basis that both the 50 and 200-day lines are rising. We've had an unfilled gap to the upside earlier in the month, and that means we're in the run-up to a golden cross, which suggests that we could at least get back into the low 40s by the end of next month. The other positive there is that we've had two bounces for the RSI above neutral 50, and that tends to be a decent leading indicator on the upside. So this looks like a mid-move consolidation ahead of a move up to 0.42, 0.43, etc., etc. This stage only back below the 50-day line at 0.26, really questioning the rebound scenario. Moving on to another stock which is looking surprisingly strong at the moment. Maybe not surprisingly strong if you're a fan of the shares, but we've got firing. And if you look closely at the price action to start, well, basically from Thursday last week, we had, especially yesterday, a very strong hammer candle bouncing and to close near the high of the day. And today we've opened at the low and closed so far at the high of the day. Our initial target here was 4 pence, which we've basically hit now, and above 4 pence on an end of day close basis, looking for 5.6 pence at the upper parallel of that rising trend channel base by the end of next month. This stage only back below August resistance around 3 3/4 pence on a sustained basis, really delaying the upside scenario. You can see also we've had an RSI rebound above the neutral 50 level, which has been the leading indicator on the upside there. Difficult situation at the moment with global petroleum because it keeps going back all the time, but we have bounced above the rising 50-day line, which tends to be a continuation signal. That's at 0.17, and above that looking for, I suppose, at least a move back into the upper 20s, if not the best levels of this month. But upper 20s, I think, are possible, or is possible, by the end of next month. Onto a stock which is not normally covered by myself or anybody else, but here we've got with IG Design, a bear trap island reversal, so gapping down in September and gapping up now. That tends to be a very reliable signal. We'll see if that works this time, but above £1.27, the floor of the gap, looking for the shares to at least get up to £1.43, which is the floor of the gap, and then hopefully by the end of next month towards the 170 area, but at least the low 140s looks to be on the cards while we're above 127. Onto a stock with a rather irritating name, MyCelx, and here another stock which is a bear trap island reversal, gapping down last month and gapping up now. What we'd like to see is an end of day close back above the old February-March support there at 41.5 pence. If we can do that, then hopefully the bottom of the gap there from September, 44 pence, could be on its way, and we'll have a turnaround on our hands. Moving on to Pantheon, which has apparently hired a hotshot investor relations company in the US, and looks like the shares are responding well. Maybe they responded rather better yesterday and the session before the announcement. But the top of the rising trend channel base there at 21 3/4. Above that, looking for 26 pence by the end of next month. Once the IR company kicks in, one presumes. RSI basically at the overbought level, but the 50-day line rising now, so it suggests there's a bit of gas in the tank there to head higher for the shares. On to the last two, and the first one is one of the most boring companies around if you are of that kind of mentality, but here you can see that we've got a rising trend channel there from April 2022, and for React, the top of the channel, £1.10, which we're looking for as soon as the end of next month. A nice hammer candle thrown in the mix there last week above the 50-day line, which tends to be a good continuation signal. So let's see if we can get up to £1.10 while we're above, or especially while we're above the old September resistance at 85 pence. Finishing off with YouGov, which came up with its preliminary results today. Here you can see that we've got the shares back above the old October, or the initial October resistance, around the 446 pence level. Above that on an end of day close basis, and above the 50-day line, 452. We're looking for up to £5 by the end of next month. The key here, I suppose, is staying above 440 in the interim, and if you're cautious, we want to see an end of day close above that 50-day moving average. That's it for me today. More updates tomorrow.